Good morning, everybody. Hey, it is Friday, October 8th. This has been the first full week of October. So yesterday we ended up in not too bad a shape, but the question is, where are we going from here? Which way will the streetcars go? That is the question, the cable cars. And then are they going up or are we going down? And Dave and I will talk about that and more when we get started here in just a few minutes. But before I do, remember, folks, that the closer you get to retirement, the more important it is to make sure that you understand how much risk you have in your portfolio. And so we created our core retirement design to help put together the retirement you always dreamed of. Give us a call at 863-382-0037 to start going through our process, the core retirement design. Hey, Dave's coming up next. We got lots to talk about: employment, the market, interest rates, a lot to get through today. That's next.
Modern English, modern Dave, and morning Dave too. It's 19 here before 9. Let's check in on your money and see how your IRA and 401k are treating you this morning. Wasn't a bad day yesterday on Wall Street, and looks like there's the possibility of at least being a flat day today looking at the futures. Let's head down, check in with Statler Financial Services, Phillip Statler, and see what's going on. Phillip, good morning. How are you?
Hey, good morning, Dave. Hey, we finished up the first full week of October, and man, it has been a up and down week for sure.
Boy, it sure as heck has to set the table for the morning. Yesterday was another up day on Wall Street. Dow was up by 338. Standard & Poor's was up by 36. NASDAQ was up by 152. We were approximating a 1% increase. It was a pretty good day. A lot of that probably just relief of the fact that our dang fools up in Congress managed to kick the can down the road by 30 days on the debt ceiling, which excited you and me to just absolute no end, right?
That's right. And that's it. We had rumors of it. Now it's official. I think the Senate actually passed it, sent it to the House. Yep. And hopefully the House will sign off on it today. It'll be a done deal. Kick that can just a little bit further down the road.
Yeah, so down the road, too. It's the week before Christmas. We're going to do it again, which is exactly what we need in the middle of a Santa Claus rally.
Yeah, it really is. It's interesting, all the stuff. You read different articles, and I was reading one that just made me stop to think a little bit. We talk a lot about supply chain issues and how that's been a problem. And this article pointed out that stimulus isn't going to help that. As a matter of fact, it's going to make it worse because you're giving people money in a stimulus effort and they can't go buy anything because the supply chain doesn't work.
Yeah, the net result, really, when you flood a market with money and there isn't anything to buy, what is available to buy ends up going up in price because there's a surplus of money chasing it. And, oh, gosh, we really need more inflation right now, don't we?
Oh, yeah, right. Like a hole in the head, right? We just do not need it. It is everything's just going up. And I know I went to the gas pump yesterday. I wish I'd have got it the day before, Dave. $3.15 I had to pay yesterday.
Yeah, and that's even with the new Wawa opening up. That, with sale prices on their gas, that ended up when the other two opened up, it chopped the price down by a little bit while everybody met the price. Well, we got the same effect up on the north end of the county now, but, the floor is higher than it was a couple of weeks ago.
Yeah, it definitely is, and we're seeing that across the board. That was a pretty big increase in gas price.
I got you. So we got the rummies up in Washington messing with our brains and basically feeding us a little sugar for a month, and that's about it. And we get to the government data dump for the day, and this being the big week of the month with the unemployment numbers coming out, we got a slew of them. Let's start out with the good news, and then you and I will pick apart the bull crud. Unemployment rate for October, the way it's going to be reported at the top of the hour news, down from 5.2% all the way down to 4.8% unemployment. Isn't that great news?
Dave, I just have a hard time believing that number. I'm trying to think, how could we get there? And it dawned on me that, I bet there are a lot of people that between the age of 62 and 65 or 67 decided, this COVID stuff, I'm over it. I'm retiring. And if that's the case, then that takes those people out of the workforce. And that would then give us, maybe we could get to that 4.8% unemployment rate.
Yeah, that was kind of basically what I was reacting to as well. I'm also waiting to see the full unemployment report and see what that completed U6 number looks like. I mean, we know there's a lot of jobs that are going begging, but we also know there's a qualification mismatch on some of the jobs. And the combination of people that have just said, oh, screw it, I'm going to stop looking, with the people that are saying, oh, screw it, I'm going to just retire. Because the other numbers we got this morning do not back up a 0.4% drop of the unemployment rate, the number of jobs we created last month. The good news is 317,000 new jobs in the private sector, but total jobs created for the month last month, only 194,000 compared to what we expected, which was closer to 500,000.
Yeah, and that's even a big drop from the month before, right? It was like 366,000. And I know that number got revised up somewhat, but still, that's a significant decline from August.
Oh, yeah. The August official report was 235,000, which, if I remember correctly, had both of us thinking about people jumping off of buildings. They revised that up to 366, which even makes the comparison for the September job number look even worse now.
Yeah, it really does. And I'm glad to see my tip sheet's already updated August numbers. I wasn't sure if it had or not, but at 366,000 in August and now 194 in September. That's definitely going the wrong way, Dave.
Offhand, it strikes me that way. Let me go back to some good news in the process in terms of average hourly earnings. In the last year, average hourly earnings for the American worker is up by 4%. That's in about the rate of inflation, which at the very least is nice to have. It was a 0.6% increase in hourly wages last month, and it was only expected to be about 0.4%. So we'll take that bit of news happily.
Oh, absolutely. But it becomes inflationary, right? I mean, we know that the wage inflation is there because we're trying to get people to go to work. I mean, I was driving down the road the other day and I saw, McDonald's looking for $12 an hour help. Who'd ever thought that would happen?
Even allowing for a $10 minimum wage, McDonald's and the fast food joints paying $2 an hour over minimum. That's just one of those make your head explode numbers, because that just tells you that there are more jobs than there are people. And actually, the economist in me says that's the way the minimum wage needs to go up anyway, by having jobs bidding for employees, because that's what actually moves wages up, instead of having the government say you must pay this X or Y or Z.
Oh, yeah, absolutely. Supply and demand is what should be running it.
Absolutely. And generally, that's the way the minimum wage has been effectively ratcheted up over the years. When the natural wage begins to go up, then we lock it as being the minimum as time goes on. So actually, in retrospect, while you and I were kind of going, on the notion of passing that $15 minimum wage referendum we had in the state of Florida, now market conditions are actually bidding it up to the point where the minimum wage is going up to above what the law says.
Yeah, that's right. And that's, that's the issue of supply. And so, there's not enough people that want to work, and we need them. So, that drives
and economics are actually doing what they're supposed to do now for a change. So I'm kind of happy to see that. I didn't have a chance to ask you before we went on the air, does any company have any news out today that's worth mentioning?
Well, there are some things. We don't have really any earnings, Dave. But I did find this somewhat interesting, and it was kind of the head of a lot of different news reports today, and that's Tesla. They're going to leave California in their rearview mirror and move their headquarters to Texas.
Ooh, are they using self-driving cars to get there?
They probably need self-driving trucks, right, to load everything up and move it. But it doesn't say that. But they're also increasing their production, it says, at their California and their Nevada plants.
Okay. Yeah, I saw that item about moving to Texas, and that the lower tax state, the more business-friendly corporate tax structure in Texas compared to California, it's been kind of a trend for the last few years. Texas has been gaining a lot over California as that's gone on.
Oh, yeah, there's a lot of that stuff in Simi Valley, California, has been moving towards Austin, Texas.
Understood. Oh, sidebar night item that I see on my news ticker, and it might explain some of the behavior of the markets. You and I talked before we went on the air that after the unemployment number came out, we had a substantial dip in all three of the indexes, and then they kind of rebounded. Might be partially because of the observation Barron's just made on their blog. That 194,000 job figure last month, which really stinks. Barron's is now saying that should probably make the Federal Reserve think real seriously about whether or not they want to start tapering this month and next. So maybe the reaction of the market has been that this means that we're going to get more fiscal heroin out of the Federal Reserve.
That might be interesting. You know, I was looking at another thing that caught my attention, Dave, in terms of interest rates. They were trying to say, you know, that they put a chart out how long they thought. You know, they thought that, hey, you know, the yield curve was changing, not to the good as far as raising interest rates this year. They thought tapering would really start the first part of next year, and that by the end of 2023, we'd actually see interest rates themselves start to go up.
Now, that would make more sense than the rumors that we keep hearing about they're going to start the process of this month's meeting.
Yeah, I mean, I can't remember this guy's name that wrote the article, but I just thought that was a pretty good chart of how he thought things should work out in the next 2 years.
And given what's been going on, I mean, we went for a year with the Federal Reserve saying, come on, Congress, you got to do something on fiscal policy. And Congress did nothing. Now, all of a sudden, the Congress is going apey on fiscal policy measures, and the Federal Reserve talking about doing some tightening on monetary policy. Put them together, it could be a mix for disaster. So if the Fed would sit tight for a couple more months, it probably wouldn't be a bad idea while Congress goes crazy.
Yeah, well, you know, there needs to be, obviously, with all the choppiness we're seeing, there needs to be some stability somewhere.
Yeah, and we don't have any on the political front. That's for doggone sure. Resetting the table for the morning. Up day on Wall Street yesterday. Some upsetting, but at the same time, second thought reaction news this morning on the economic front. What are we doing 45 minutes before the real money gets thrown around?
Dave, we have been all over the board, and right now it's a mixed bag. We've got the Dow is actually back down 0.1%. The S&P 500 is basically flat right now, and the NASDAQ is up less than 0.25%. Small caps are flat, and the VIX is heading up just a tad. On the commodity side, we've got silver. Oh, that's kind of nice. It's up 1.8%. It's finally crossed back over 23 to $23.07 an ounce. We got gold up 0.9%. And then crude oil, but Dave, I'm afraid it's going the same direction. It's up 1.1% to $79.19 a barrel right now.
Oh, poop, $80 a barrel might not be that far away. Overseas markets, Asian Rim market, pretty much uniformly up this morning at the close about 6 a.m. Europe is looking at our economic reports and saying, oh, no, they're all off. Fractionally, but all of them are in red ink midway through their trading day. Advice needed, Phillip. I need to get my retirement fund stable so I know what I can retire on in the years to come. How do I find you to get that advice?
You know, Dave, that's why we have put together our process. We call it the core retirement design, so that folks can really and truly put together the retirement they always dreamed of. Give us a call at 863-382-0037. Check out our website, statlerfinancial.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, and now on 95.3 FM.
I got you. We're going to lose the Saturday noon report because the Gator program starts at 9 a.m. on Saturday morning. So 6 o'clock Saturday morning and 10 o'clock Sunday morning. Fair enough?
All right, man. People have to get up early to listen.
Yep, that's it. Or just go to early church and then listen to it at 10 o'clock Sunday morning, like I do. Phillip, thank you so much. We'll see you Monday, all right?
All right, man. Have a great day.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. From the pit.
Hey, folks, I want to thank you for joining us on this Friday, the first full week of October. I hope you have a great weekend. Listen to us over the weekend. Remember, Saturday morning, 6, 10 a.m. Sunday morning. Join us again Monday, same time, same place. Until then, have a great weekend. Bye now.